All right. Well, it is good to be back. It has been a minute. I am finally in a place where I can get back to doing some more video content. Been traveling a lot. I went through a move or relocated my residence, and so the whole office setup got taken down and actually didn't get put back together until officially today with all the traveling that I've been doing for my day job. And so upgraded a little bit of the technology. So I'm hoping these videos are a little bit more clear. You can hear me a little bit better. You can see things a little bit clearer. Please comment and let me know your thoughts compared to some of my previous videos. I'm going to keep the agenda today pretty simple. We are talking about Bitcoin specifically through the context first of the traditional financial markets. I've got the Nasdaq up right now. And then I'm going to do a Bitcoin update, give you my current thoughts on the state of things, and then jump to the miners utilizing the Bitcoin mining ETF, WGMI. And then we'll call it a day. And then we can kind of get back into the swing of hopefully doing these every week for the folks on X as well as on YouTube. I'm going to kind of combine the two here like I normally do and get it kicked off, folks. So it's good to be back. Reminder, not financial advice. I'm not a financial advisor. Just use this as education. All the things I could talk about or things I do talk about could go up, down, sideways. I'm just giving you my thoughts, my convictions, and that's where we are. When I first started doing these videos, we were from a market standpoint. So we were talking about last summer, I started doing videos. We were in this area right here. And again, this is the NASDAQ, folks. And coming out of, mind you, the lows in the fall of 2022, I just want to remind folks, we are up 65%, okay? 65% in inside 2 years. That's a generational type of move in risk markets. You wouldn't know it. You wouldn't know it. What's a good barometer for us not knowing it? That well, I guess you could call it that volatility event slash mini crash a few weeks back. Or was it early August? Yeah, it was early August. Had everyone I don't know, guessing, thinking, worried, yet we were at a place, so we fell down to this area, okay, as I'm highlighting on the chart. Again, this is NASDAQ. Last summer when I was doing these videos, so in this range, I think the highest target on the NASDAQ was maybe in that range, the highest consensus target. I could be wrong. I'm relying on memory here. And so think about that for a second. We made a move past where everyone thought we were going, had a crash to way above where everyone thought we were going. From a volatility standpoint, mirrored what we saw in the COVID crash, and I believe a spot or two in 2008, 2009. That just tells me a lot of what's going on here. And again, in my opinion, we were in the midst of a strong uptrend, and the Nasdaq has been much easier to read. Right? You just have bullish consolidation events and then breakouts, rectangle consolidation event, breakout. I mean, these are just like textbook consolidation events. I'm sorry, I just glitched there. Um, that is not the intended drawing there, but you can see what I'm talking about, right? Bullish consolidation in the form of a flag, major breakout, correction, major breakout, and then we're in the midst of a correction. We're kind of coming out of it, testing this top end of the flag, and the question is what's coming next, and we're going to find out. My bias continues to be in the direction of the trend, which is very, very strong. It's very, very clear to me that this is a V type recovery uptrend, right? And that's exactly what that is. That's a V. So that's a lens I'm looking at everything through at all times, and the volatility in between, the corrective periods in between, Those are the toughest things to predict, how long they'll last, how deep things will go. I'm not a active trader for this reason, because I feel like I will end up with less than I started with. And periods in my financial career, I have tried trading volatile events, making a lot of moves. Now I will make 3 6 month type swing moves, 6 month 2 year type swing moves outside the core positions happily, and let the market do the rest of the work. So where do I think we are right now? I think we are, whether we break out here or uh, we have one more push down and then we break out, I don't know. My bias is always going to be in the up direction, because again, I'm not trying to trade this or take guesses. These are just guesses at this point. The goal here, the where some Nasdaq stuff, some positioning will come off the table, is less about time and more about target. And so this is what I'm looking for here. Somewhere north of 21,000, I think is a good place for this move, this major move, to potentially climax. And when I say potentially, that means it can go a lot further if it hits that, and it could stop short of that as well. So that's the lens at which I'm looking at this from. And so next, I'm going to move to Bitcoin. I cleaned up the Bitcoin chart for a reason. I want to, again, look at these markets through the lens of the global risk on market, and that is the Nasdaq. Okay. Bitcoin with its market cap is not the global risk on market or barometer for risk on. It is very sensitive to it, and in my opinion, reacts to it. And it has done that. It doesn't do it in a way that's easy though, folks. So here's the caveat with Bitcoin. Markets get smarter, people get smarter. People are always looking for the vehicles which could potentially provide them with the most gains. And I will always hold a large percentage core position in Bitcoin and never sell it, because I realize that the majority of people, myself included, are going to be wrong in terms of where we think Bitcoin is going in the short, medium, long term. If I have a view that I believe Bitcoin and its value per coin is to reach at some point $1 million, or $500,000, whether that happens in 5 years or 10 years or 15 years or 20 years. The path there is not going to be one that's easy to predict for most people. And so I've learned that lesson with things in the past, in early in my investing career. That being said, now let's get to the speculation, right? This is why I'm doing this video in terms of the short term. Again, I started making these videos last summer. We were in this this was just time-based capitulation at its finest, that circle there, folks, for those that remember it. And the closer we got to this level, the more bullish I was getting. The more bullish I was getting, the more annoyed I think some people were getting with my posts. Par for the course. Actually, I like to see that. And where I thought we were going to break out sooner, we didn't. Just this flat sideways correction, and then eventually we broke out of this consolidation period phase and made a pretty good move up. I mean, relative to where the impulse started. So if we look at just relative to where that impulse started, let's see. Yeah, so somewhere between the 2.272 extension of where this impulse started from the origin of the impulse, to the 2.618. Let's take a look at, so get rid of that right now, and just take a look at what a measured move in that potential scenario would do, where this impulse originated, and the 2.272 gets up to $262,000. I'm just shocked and actually pleased that I'm not seeing a lot of bullish calls. I don't routinely see a lot of calls for, over 150K, even over 100K. Um, don't they just seem sporadic. And at a time where the risk markets are doing what I illustrated with the Nasdaq before, and mind you, an environment where from bottom to top here, this move was 250% in Bitcoin. In again, very clear what's going on here in my mind, right? We have just a series of, all right, higher highs and macro higher lows. And so the bias here needs to remain with risk markets, in my opinion, and that's in an uptrend. And this consolidation has lasted way longer than I expected. Way longer than I expected. But that's markets for you folks. Things don't always happen when we want in our timeline. Everyone's looking at the same information. Everyone's trying to speculators are trying to catch breakouts, and the market is just not allowing speculators to get free rides. That's the way I'm looking at this. Those that firmly believe in what they own, and simply add on major dips along the way are the ones that are getting rewarded, and those using leverage are just getting chopped up. And so this here is just time-based capitulation. That's all it is to me. What does distribution look like? What does reaccumulation look like? Well, distribution doesn't look like this. Okay, that doesn't look like this. Where's an example of that? I showed you. I showed you how many examples. That's not distribution. That's not distribution. That's not a distributive pattern. This looks like a local distributive pattern, right? And then you got that just crazy flush out. But then, in the context of a larger pattern, now we're back into this is an accumulation pattern. Most of the time, the highest probability in patterns like this, that's a bull flag. That's just not there's no sure things in anything in life, but those are the types of things you look for. I look for. Where do we start distributing? Well, back here, right, where you see these just very, very tight compression in kind of this sloping direction going up, and then, a rally that fails to materialize like this one, right? Just gets cut short, and then you undercut it really quickly. And again, just tight compression without, immediate breakout. Those are the types of things I would look for in distributive patterns. So like here, right? So let's take a look at, right? Just you have tight compression in the terms of this price action. You've got this like rising wedge type thing right here. This is a diagonal type move, and then breakdown, and then failure. And here as well. The market generally doesn't give you 7 months to sell within 20% of the top. That's a long time. That's really rewarding people that, missed selling here. Oh, you're going to get rewarded again here. You're going to get rewarded again here and rewarded again here. I don't see that. You got to be in distributive type patterns. After that distribution, you see big drawdowns, right? You see big drawdowns. I mean, we're talking 50% moves very, very quickly within weeks of the completion of these patterns. And we just haven't seen that. We haven't seen that. So the bias here is very much so, we've got 1, we've got 2, we've got 3, and we've got 4 moves, and 5 is in front of us. And 5 is in front of us, and the target for me, given how long this compression, this energy has been kind of building up, is now a bit higher than I projected initially. So my targets, somewhere north of 265 to 300 wouldn't surprise me in the least bit. When that happens, we're as anybody's guess, could be as soon as the end of the year, could bleed into the first half of next year. But that's just the way, that's my belief, and that's the way that I'm looking at it right now. So moving on to miners. The miners have been really, really challenging and tough read for me over the last couple months. Looking at it right now, I mean, in the most simplistic form is what I can do is go back to the basics, right? Macro higher high, macro higher low, macro higher high, higher low, barely higher high, higher low, higher high, higher low. And so, we're still in an uptrend. We're still in an uptrend. The bias for me has to be us, the next move, finding some type of higher high. And WAGMI's at 17. A 2 to 3x move to form that next higher high is what I'm looking for through the end of the year. Does it start here? Maybe it does. We're bouncing off the cloud. My bias is that it's starting here, right? This is a nice three-leg move, ABC into the bottom of the cloud. Only thing, we're working with, we're this major volume shelf, right? This is a massive volume shelf. We've got the 30-week that we are sitting under as well. So I'd like to see power out of this and no type of check back, right? That's what's needed or called for to get through two very technical areas of just resistance. And so that's what I'd be looking for. And if we don't, maybe we get one more check back and then the move up and out. Oh, that was an awful that was an awful up and out. I am not looking for big checkbacks kind of coming out of here. This is that's a major move. I don't think the market rewards people too much. Maybe you get something like that type of move, but we'll see. We're going to find out, folks. We're going to find out coming to a very bullish time for markets in terms of a presidential cycle through the end of the year. Markets get smarter and smarter. Everybody knows that the most bullish time is post-election, going into December, November, end of November, December. I think some of that gets pulled forward, given the fact that everyone and their brother and sister knows that. I also feel like everyone and their brother and sister and traders are wondering, how much of a sell the news event the first rate cut's going to be. I don't know any traders that are saying that's going to, I'm going to start deploying capital when when the rate cut comes. It seems like more of a wondering if it's a sell the news event, which in my mind pretends positioning already happening, right? If you're kind of gambling with a lot of capital, you're taking the chips off the table into something that we haven't seen in years. So I'll leave it at that. And with that, folks, good to be back. You're going to get some more content out of me. Do let me know the quality of the video, audio, all that good stuff, because I did do a little bit of an upgrade for you. Take care. Have a great rest of the evening.